Let's talk about Cineworld. The share price saw a magnificent 330% gain from its October lows, but we're starting to see weakness in the share price, probably due to profit taking, but more importantly, the Financial Times reporting that the firm might enter into voluntarily insolvency process, where they effectively look to reduce costs further as negotiations with lenders haven't really been planning out as expected. You probably read about it online that they're being sued by some companies where they haven't paid rent. So that is what's happening with Cineworld, and that's obviously causing traders and investors to become nervous. And that is what we're going to talk about in today's market update. All right, so this is Cineworld, right? So it had that amazing rally from about 16 all the way up to about 66.98. And from a purely technical perspective, we're stuck within this wedge pattern, which remains the bearish pattern. And, you know, the price got rejected here. We can, of course, push upwards to 60 again. But realistically, after that strong gain in today's news, I suspect we might actually trade towards 33 and 30, and maybe down here around the October 28th low, we might see some support. Alternatively, if that doesn't hold, down here around 15, which is where the lower trend line kicks in. So what's the issue here? What's the problem here? So one problem is effectively that Cineworld might not have enough money to survive Christmas. So Bank of America, which were part of or helped Cineworld to acquire or its attempted acquire of its competitor, Cineplex, said that the $400 million that the firm had in cash in June wouldn't be enough for them to survive winter. Another analyst told the Telegraph that the company needs some $380 million to survive until spring. And why is it so important to survive until spring? Well, the company itself decided to close its doors around October 4th. The reason for that is that, you know, blockbuster movies like the latest James Bond movie was delayed until April of next year. So they don't have good quality movies which they think can bring in the cash that they need. The other thing is that following the closure of their 663 outlets worldwide, we had another national lockdown in the UK, and there's talks of potentially opening up for people to spend time with family over Christmas, but that then in January we're going to go back to lockdown again. And if that would happen, and it looks quite likely, then that in combination with the movies that are not being published yet, is realistically they're not going to be able to open until maybe the end of the first quarter. Now we saw a very, very nice and sharp rise here in the price, and the reason for this is because of the latest COVID-19 vaccines. But the problem is here, can they deploy them quick enough, and so we can start to remove the lockdown measures? That is the question everybody would like to know. But the way it looks like right now, no, it doesn't look like that's going to happen, and that's why we have the risk of the share price moving lower and lower and lower. Just to give you an idea, they lost some $436 million in the first half of 2020. And in the interim report, they did say they had 361 million. Now, I'm not saying that the second half of 2020 is going to be as bad as the first half, because they're not paying rents to many of their of the owners of where they have their cinemas. So maybe the loss is going to be lower, but they are just there where it could be a situation where unfortunately this company does go bust unless they raise capital. And that's the biggest challenge for investors. If they raise capital, many times that would dilute the value of the share price. So you might find yourself that the share price is much lower from one day to another as they announce these sort of deals. And sometimes some of these vulture funds and other people that want to invest in distressed companies, they will wait until the company is on its knees, and then they move in and scoop up the share. Or they might even wait after it goes bankrupt and then get involved in some sort of a bidding process, try to take over what's left. And that is the problem here. So from a purely technical perspective and overall risk, I do suspect that people that are not already long and that want to be long, I don't think they would be buying up here after that massive rally. I think they would prefer to enter around 22.72. I also suspect that the same people that would like to buy here, they understand that this is something that will probably survive. At least that's what I think. It will survive in one or another form, but they wouldn't be betting the farm. They wouldn't be allocating a lot of money to this company just because there's a high risk that they lose all of their money. With that in mind, we're going to wrap things up. If you have any questions, just put them in the comment section. Don't forget to subscribe to our videos, and don't forget to check out our other content that we published. For example, we talked about gold. That is looking really interesting, and potentially getting ready for another slide. We also talked about the British pound, which was really close to taking out its monthly high when we did that update yesterday. Thanks so much for watching. I'll see you guys soon, and don't forget to leave a comment, and don't forget to leave a thumbs up. Thank you, and bye.